Good morning, traders. This is Mark here from the day trading room. The time is coming up to 11:15 in the morning, London time, on Wednesday, the 24th of November. And it's good to be back with a decent internet connection at last. From my last video, I talked about how some of my quotes were being choked, and I found out that actually my internet service provider was treating TradeStation as a peer-to-peer file sharing application. It was confusing the stream of data with someone downloading movies or software or whatever, and so it was choking the traffic at peak times. And now peak times for the UK is obviously when everyone gets back from work, so about 7 o'clock in the evening, and of course that's the last 2 hours of the market. The market's open until 9 o'clock in the evening UK time, so I was getting problems with that, but all seems to be resolved now. I've switched to a new internet service provider that came online yesterday. No, sorry, Monday. So my trading has been light Monday and Tuesday while the connection settles down. Monday was the changeover day, and yesterday, and they say for a few days the connection will be up and down while they try and get the best speed for me. But it looks like I'm getting twice the speed of my previous connection, and they're not going to treat TradeStation as a peer-to-peer file sharing application, so we should be good for looking forward to a good profitable December with a good solid connection. So anyway, let's run through what we got up to Monday, Tuesday. Market's been up and down all over the place. They cannot decide what they want to do. Monday I didn't get involved at all in the morning because of the connection changeover. I didn't want to get caught out with anything. In the afternoon the connection was done by then, and so I had a couple of trades, which I hadn't, but I'll talk through those in a minute. But let's have a look at Monday. We're on the 3-minute chart here. Let's zoom into the 1 minute. There's the 3 minutes so we can see where we are in relation to Friday's trade. We gapped down, and but we're well within the range of Friday, which really was still digesting the Thursday's gap up. We just chopped around the whole day, and Friday was pretty similar. So you can see how the price is in relation to Friday on Monday. So let's zoom into a 1 minute now to see the actual executions. And actually, it probably saved me on Monday not having my connection in the morning, because I know I would have taken this pullback, and I'm sure a lot of people did. You've got this opening drive, a good solid push up. Perhaps you guys got on this first little pullback and pause, trying to look for the gap fill. Obviously that's one of the hypotheses that I would have had. So maybe got onto that, maybe got onto this deeper pullback, didn't offer much, hope didn't get caught out, but this is something I definitely would have taken. We've got a pullback to the VWAP there. You've got it coincides with the 50%, as it often does with the earlier in the morning should I say, and also got this little cluster of resistance. So here was a lovely place to go long, and it would have just hammered straight through it. Would have taken a stop on that. I know I would have taken a stop, probably all the lot. Didn't even get a chance to get a scale on that. But as I say, wasn't trading, so that probably saved me. In the afternoon, this was an active day. This was a great day for trades. Perhaps some guys got on this nice little tail here with a tick reading that didn't confirm. That would have been a nice little trade. But what I took is actually this pullback. This was now, in my eyes, let's go back to a 3-minute, a deeper downtrend. If we can, we've got a deeper downtrend here. We've tried to push up, we've pushed lower, consolidated. Second push. I'm looking for a push back to a good level that's going to cycle the market, and then a potential retest of this cluster here. And so I'd set some alerts for around this level here, and I was looking anywhere between here and here for a push, for a curl and push lower. So let's go back to the 1 minute to zoom in on the actual action. So alerts went off, came to the screen. I was interested in this level here purely because of the cluster of support now hopefully turning to resistance about here, and so I got short at this point here. It pushed lower, and as I was looking for a longer term trade. I'm not looking to scalp this because of the issue with the connection. I put my stop in and I was looking for a pullback. Really, this was my target area, and I had an alert set here where I probably would have scaled and then scaled some more here. Didn't get it. We got about a 10 point, just under 10 point move before it came against me and pushed up, and I took a couple of ticks stop on that. Um, so that's disappointing, but I'm still looking for that short. Maybe it's got one more push in it. I'm not going to hold the position, but I'm going to look to re-enter. So re-entered as we've got this beautiful spike over the VWAP, push back down. There was my short, as the arrow there. My stop's going to be here, just above it. Again, it gave probably 6 or 7 ticks, but I'm not looking for that in that particular day. Didn't work out, pushed up and stopped out. So red day for me. Maybe shouldn't have traded because of the connection. Normally wouldn't, but I was trading lightly. I was looking for larger moves, and those setups I'd normally expect a cycle lower. But that's why you manage risk. That's why we use our stops. That's why we don't get stubborn. I mean, I just want to show here what could have happened if you're not managing your risk. We're expecting the market to have one more cycle lower, and then we don't know. It could be double bottoming and pushing up, but we would normally get one cycle low, which is what we're trading. We're trading the odds. We're not trading certainties. We're not trading guesses. We're trading expectations, and the odds are on our side for that trade. But it doesn't mean it works all the time, which is why I scale, and which is why I will always exit the position if it's not behaving as expected. But just see if you had to take that first trade, for example, and you stayed with it, and let's say you'd added here, you'd have then been in a larger position, and it really didn't give you much opportunity to scale out. If you've been stuck in this, and less disciplined traders would have been stuck in this right to the close, and that's a pretty hefty move against them. You're talking, nearly 90 odd points there. That's enough to blow you out if you're trading looking for 10, 20 ticks at a time. Your size is going to be proportional to that sort of target. So if you're taking that sort of loss, you really need to rethink your strategy, and accept that you are going to have losing days, you are going to have losing trades. It's part of the game, and as long as you manage those, as long as you make sure that the risk is defined, the market can't hurt you. And it's something I said in one of the comments on a previous video. Someone was mentioning about the confidence of taking trades, and really I think it comes down to accepting risk and also having the confidence that the trade is going to work. If you know that the trade setup generally works more often than not, you're going to have the confidence to take it. If you've defined your risk and you've accepted it, so you've said, okay, I'm going to risk 15, 20 ticks on this, for example. I'm going to use 2 contracts, 10 contracts, whatever your risk parameter is. You know the dollar amount you can lose, so you're prepared for that. You're accepting that risk. That's how much stake, if you like, you're prepared to put on the table to see if the trade works. It's when you're going with open-ended risk, you're going with position size that's too great for your account, too large for your account. That's when the uncertainty comes in, because you don't know how much you could lose. You don't know that you think this trade could do you damage. If you're regulating your risk, regulating your exit point, stop point, then the market can't hurt you. It's just sticking. If you stick to anything, it's sticking to managing your risk, because you need to keep your capital intact. Okay, so that was Monday's trade. Yeah, not a good day, not a good day. But perhaps I shouldn't have traded it, but never mind. Let's have a look at Tuesday. A little bit better today. Yesterday, should I say? Um, Trading lightly still because my connection's on and off. So I'm putting a stop straight into the market, so that if the connection goes down, I know I'm protected. So using OCO orders, or at the very least a stop. Anyway, let's talk about this first setup. We've only got a few minutes left, but I want to talk about this. This is a great setup, and you know that I'll have a couple of hypotheses when we've got a gap down. I'm either looking for a gap fill, so we're either going to get responsive buyers that are pushing this market straight back up, or we're looking for that continuation. Now, The overnight trade was very, very, very weak. We'd push down and we're opening and we're opening at the lower end of the overnight trade. Now, often when that happens, the trend will continue. But I want to discuss about how you're looking at the other side of the trade. If we look at Monday's trade, a lot of people, a lot of buyers who were thinking this was a pullback and it was a healthy rally. Don't get me wrong, it was a good 120 point rally from the lows, and it would have sucked in a lot of buyers. It would have shaken out a lot of shorts. So there's a lot of people who are net long. And now, if you put yourself in their shoes, you've got a gap down, and most of these buyers from Monday, we're talking shorter term traders, anyone who bought from here up to here is now in a losing position. If you think the majority would have been buying in this chunk, they are sitting on a bit of a loss if they held overnight. And so, put yourself in their shoes. They're sitting on a bit of a loss. They've seen the market drift down. They're thinking perhaps at the open it's going to push back up. And so you get this scenario where you get a little shudder, and that's all the immediate longs just liquidating. But then you get this counter trend push, and this is often a little bit of manipulation by the specialists, the market makers, just looking for that little push, just so they can sell into. And you also have got to think of the psychology of the people who are caught. All the people who are caught long are hoping. And now we can all step back to a time when we're beginning traders, and we've been in a situation where we've felt the pain. And every tick means so much to you. You're there in the position, you're waiting, you're looking. If you're long, every tick up is great. Every tick down hurts. It's magnified. And if you think of that at the beginning of the day, as soon as people see this, they're thinking, I'll just hold and just see if it does pull back. And so what you get is you get people holding, and they see this thinking, great, it's coming back. Then they see it starting to drift down, and what you have is you have a situation where people will start putting on really tight stops and saying, I'll just hold it, but if that low breaks, then I'm out. And so we've got this little flush up. There's no buyers interested. Look at the ticks again; they're not confirming. Immediately there was selling coming back, and that's a great opportunity to get short, to get on that wave of capitulation, to get onto those stops, to get onto those longs that are panicking and just coming out. And then I'm looking for the flush into low ticks. Didn't quite get the 1,000 ticks, left a little bit on the table with that one, but that's a good pattern, good setup, and it works regularly. Running out of time here as always, so let's run through these very quickly. This was a great little trade. My usual setup, 11,000 cash. Perfect little setup. Push down, tagged under by about 10 points. As soon as we see a bit of strength, a little bit hesitant on that one, but I waited for that pullback, got in on there, and then just held that. I was looking for the VWAP, got a bit impatient though, and came out early. But that's a great trade, good 20 point trade. Really pleased to get that in the bag. Again, it's a similar situation to we had last Tuesday. The push down to the whole number on the cash. You see the pause almost at the time of day, not quite in my little zone, but close enough for me, because we pushed lower, because the volume was starting to dry out, because we've got that flush, because we've got the low ticks. A lot of good things on your side, so that's definitely worth a go. Let's go to the last trade of the day for me. This was a little bit of an unusual one, but because we'd cycled lower and we're often not getting that follow through on these down days. We used to get on down days, you get a cycle up, you get a push down, and then you take out lows. Then when you start seeing this consolidation here, especially this here, there's a good tape support here, and it made sense to me that because the buyers were stepping in quite a 20 or so points higher than the low, that there were some buyers there. There were no more sellers. The sellers had sort of petered out a bit, and so a little push back up to the VWAP was on the cards. Got that out of the VWAP most of the position, held a little bit into the close. And didn't get any more out of that. I think I got slightly less on the exited about a couple of minutes before the close. So those were the trades for those days. I'm probably not going to trade much today, and obviously tomorrow's Thanksgiving, so hope you guys over the pond have a great day. And it's half day on Friday, so probably we're back in the middle of next week with another video. So good trading, guys. Thank you for your comments, thank you for your ratings, and keep that risk managed, and we'll back with another video very shortly.